What is going on, everybody? In this video, we're providing you a state of the market in stock picks for January 24th, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, what a ripper today. We extended back over and trying to retest or trying to reach for that 4100. A lot of bullish analysis coming out. Again, talks of soft landing, a lot of different things that really caused the market. Plus, we're in earnings mode. And so the market is starting to rip. Kind of left off where Powell essentially left us just last week, and essentially the whole thought process of a 50-point basis move. But we still have to remember that the ECB is now saying that they're going to do two back-to-back 50-point basis moves, again coming from a place where they haven't seen any kind of essentially rate increases for almost a decade. And so now they're talking about two rapid amount of rate increases in the essentially the ECB is talking about. So currently, right now, we are in very much a hopium mode. The one thing to consider, even in analysis, the best analysis from last year said that he pointed out that earnings ultimately have the final say in everything. And something I've always pointed out is that earnings will tell you about as close to the truth as you're going to get in the market. And so we have to see what's going on with these earnings. Again, we are in earnings mode, so there's a lot of hopium in the air. There's enough to obviously bump this up. Question is where do we land tomorrow? And tomorrow we have some earnings. We start getting to some big earnings. We do have tomorrow. We do also have the PMI tomorrow as well, which can play into this. Into tomorrow, we'll definitely have a intraday move on top of what's to come, and following up with Microsoft after hours. Now we do have Verizon in the morning. We do have Johnson and Johnson and Lockheed Martin to open up tomorrow, and then as well as Raytheon and 3M. And then at close tomorrow, we do have Microsoft and Texas Instruments. These aren't one, or aside from Microsoft, it was the only one I mentioned in the weekly updates. But like I said, we are getting into the meat and potatoes of earnings, and so there'll be a lot of bigger plays, a lot of volatility tomorrow. And then Wednesday will be huge. Wednesday, you got Boeing and ASML. ASML is for chips, and so they'll have a big impact on what happens with chips on Wednesday morning. And then Wednesday after close, you have Tesla, now IBM, Lam Research. You got a lot of cloud and a lot of chip plays coming up, along with a huge value play in Boeing on Wednesday, and then obviously Tesla on Wednesday. So the next 2 days after close tomorrow into Wednesday are going to be huge. And that's what the market is trying to do, is trying to get a pre-earnings run, in my opinion. Now, something to keep in mind is Microsoft is expecting essentially a 15% hit in Azure cloud space, which is concerning, because if that is true, you're going to get massive selling in a lot of the cloud space. So you're looking at essentially you're looking at Amazon as a big aspect of Amazon as well. And we already know retail is going to be hit pretty heavy for Amazon, so it'll be interesting to see what happens in their cloud space as well. The nice thing, and something I've always said, is some of the best companies you're seeing nowadays, your Apples, your Amazons, and Teslas, they have created their own essentially ecosystems. They have a bunch of different aspects to help them keep afloat. But the problem is that we're seeing a lot of holes in Amazon on the retail side, and potentially even the cloud space. So Microsoft is going to be very pivotal tomorrow in how they do and moving forward. So I know there's even talk about them potentially buying Chat GPT, I believe it's called. So that's been in the talks to make them competitive with Google, because Google does have a very big, they have their own AI that is supposed to be way better. So it's interesting to see what plays out tomorrow. Again, if they are trying to price in a 15% drop in Azure Cloud Tomorrow services, this is where I talk about expectations are in the dirt. They're already expecting a huge loss. So wherever we land on the expectation is going to kind of really dictate which way the market goes. And so again, if you're pricing things to be extremely low, right, the market might pump because it's we're within expectations, so it's fine. When in fact things are horribly bad. And so again, and there was a lot of rumors today too about inflation starting to turn around and spike here pretty soon again, and essentially blaming it on China, whether that's on lockdowns or whatever the case. But could be a strong possibility. Again, really depends. We're going to see how Tesla and Apple have done through these lockdowns that have been happening in Q4. So again, this is where a lot of stuff is going to uncover, and maybe things will get good and could potentially lead to a rally. But again, that doesn't change anything. You have to understand, you have to take a step back and kind of see how things are. If expectations are so low, they can cause the market to temporarily pump. But you have to understand that, right? And this is why we have Visa and MasterCard are on Thursday for earnings. And so that's going to give us exposure to credit cards and see where that stands. We also have American Airlines and Southwest on Thursdays. So we're going to kind of look into travel as well. And so, again, we're going to get a lot of taste of the different industries the next couple of days. And so that's really going to dictate how things go. Again, even if we do have a rally, whatever the case is, you have to remember that the ultimate say is going to be next week with monetary policy. And that's going to be dictated on how the Fed feel. Again, we have to understand wages are extremely low. I think they're sitting at 4.5, and then you have inflation rate at 6.5. So again, inflation is still overpowering and causing people to have to work two jobs just to stay above inflation. And again, rental units and food still very high. It's not coming down quick enough, and so people are hopefully trying to buy time in hopes that things do come down. And if they don't, then it's going to get really bad and really nasty. And again, these layoffs, and we're starting to see more companies announcing layoffs and stocks rocketing. Again, big causes of concern. Short term, yeah, you get short term profit, but it's going to affect growth. It's going to affect a lot of things. And again, Fed's still projecting about 1 million job losses by the end of this year. And so that is what's concerning, is people are liquidating assets to stay afloat. And that's what makes everything look okay right now, because people accumulated a lot of assets during the pandemic, and now they're liquidating a lot of those assets. So this is where we currently are and what we're sitting at. So we will see in the next couple of days. It'll be very interesting. Again, the pump, we are I guess you can say temporarily out of this trend line, but something I've always talked about is every time we've breaking this down channel, it has only been a couple of days before we were pushed right back in it. And whether that is through earnings, Microsoft get crushed, Boeing get crushed, Tesla get crushed. Biggest thing is you need tech to step up, because I think value and essentially the banks have done bad, but they're still holding and pumping because of potentially what could happen with rates and their profits, and that's the way things are set up. So even though they've done bad, it's not reflected in what's going on in the market. You can't price in what's going to happen on earnings, because you have no idea what's going to happen until they're announced. And then you get the digestion of that, and then that's going to essentially play into monetary policy next week. And we'll see. We'll have to see when the next inflation report is as well. I'm not exactly sure when the next inflation report is. I don't believe it comes out on the 1st either. Might come out the week after the fact. So essentially, the Fed will be basing their opinion off of essentially the last inflation report, the 6.5 plus whatever earnings we get between now and next week. And so there are going to be some bigger earnings on next Tuesday before monetary policy comes out. And again, on monetary policy, we'll have Powell speaking So it'll be his first appearance, and hopefully he's better by then. I'm sure he probably is getting better pretty quick, but we'll have to see how that plays out. So the next couple of days really big, but again, this could be led into whatever you want, whether that's earnings mode or a lot of hopium, get a lot of upgrades, people soft landing. Last time we did this, we ran 600 points and we dropped 800. So I'm just giving forewarning. It may happen, it may not happen, but as long as you're providing some sort of risk management, things will be fine. So essentially, from where we've currently kind of ran till now, the peak of today, we've ran about 226 points so far. So again, every pump we get, people are calling that things are switching, and you have to let things play out. Maybe they do. Maybe we do pump this year. The thesis that I talk about plays out at a later date. I don't really feel that is going to happen. I think the consumer is going to crack way before then, but we'll have to see. We have to get these earnings out of the way and see what data we get from the earnings, and then come to a conclusion after that. Now, again, once big earnings is out of the way, there'll be tons more earnings, right? So the next first week of February, we'll go all the way to the first week of February, is going to be a lot of big earnings. Big earnings are kind of scattered this year. So once we get all those big earnings and kind of digest what's going on, the market will make a move from there. Yes, there'll be plenty of earnings for a while, well into February, but ultimately understand that the market will start shifting, especially after monetary policy, have some earnings. It will start making this judgment after that. It doesn't care really about what some of these other one-off companies are doing. Some great companies still reporting, but the market really doesn't care after that point. Once it has big earnings at banks, it goes pretty much off of that. So, and then we have to realize that at that point, we are going into a normal down cycle. So is something going to feed into that down cycle is what is my concern. In this February-March period, we have a typical norm down cycle. Is it going to be fueled by anything is my concern. So we'll see. But again, a very aggressive push to the upside today. But again, still battered down. Every time it tried to break out, it got battered down. You obviously can see the wick that came down today. So we have to see. But tomorrow is going to be that big kickoff for that. So let's look at Bitcoin. Again, Bitcoin has room again up to roughly around the 25K mark. Could potentially even push up to the 28, potentially even 30. We'll have to see. Again, I think it's really debating on what happens with Microsoft starting out. Hopefully Microsoft doesn't tank. We'll see how much weight it has. Again, expectations are low. So for these things to tank, it's got to be almost really, really bad. So again, just be mindful of that, even though they're already expecting a 15% hit in the cloud, which is absolutely absurd. Again, if it's not worse than that, the market's going to take that as a positive sentiment, which is pretty scary to see. But nonetheless, from that point, let's take a look over to the dollar. Again, the dollar is still holding roughly that 102. Bulls, you want this to break down. I really think it needs to break down below 100, which I'm not sure if we're going to see. It's been a struggle for it to try to break down. It's been very choppy, much like the market. Bears, you want this thing back over 105. And again, all it could take is an event and it will change, right? If we do not want inflation running, and there was rumors about inflation picking back up, and it very well can. That's what the Fed is aware of, and that's why they keep playing on these rates. And so if something happens and inflation starts picking up again, that's going to induce panic. And then at that point, you might get some sort of crash at that point. The problem is, again, everybody thinks that it's a turning point and pivot right now. So if you say something other than the fact it's a turning point and pivot, the market's going to panic. So the dollar, we'll see on there. Tesla, actually monster rip. We'll see. I think if it does start to run, I think you'll top out roughly around where the 50 is here. So the 155, I think, is a strong possibility. I don't see us really breaking above that. So we've had some pushes, obviously, for earnings. And see if this thing rolls over. And again, see how they do on earnings. That's the biggest key, is to see how they do on earnings. If they beat expectations and Tesla can't break out of 150, that means people are still concerned. They're still worried. And so if it can't, especially after earnings, that's a warning that we could be headed down and getting into this February, March normal cycle down. Again, Tesla may hold. Even if it does really good and doesn't break out, it may just hold waiting for more earnings to happen. Maybe as the market as a whole can gain some momentum to the upside. Again, trying to play both ways, trying to play both objectives. At this point, you have to, because there's no certainty that we can go up. There's no certainty that we can go down. There's a lot more leading to the downside than there is to the upside. So you have to watch out for that catalyst to happen, because we don't know if it's going to be a single event that's going to be in headline news and then the market's just going to drop. Or if it's going to be a slew of waves of bankruptcies, and then the market just starts selling off because of that, or missed expectations in by a lot. So people obviously are not scared of the layoffs and everything else that's currently going on. So again, we'll see. But Tesla got this 128 is pretty strong support. So we'll see if it would pop up. I wouldn't doubt if the market does try to break out tomorrow. Again, Tesla could lead the way by trying to hit 150 tomorrow, but we'll see there. Apple apps monster rip. Again, this thing has been pushing up, but again, hit the ceiling here roughly around the 142. Let's see if Amazon I don't really see Apple really breaking out unless the market as a whole, earnings as a whole, is doing well. Again, it can all be corrected. Maybe we hit expectations, and so the market wants to take that as a positive, even though they're in the dirt. Next week, if Powell says 50-point basis move, the whole market's going to correct. So it really doesn't matter if earnings are good or not. Again, key problem being is inflation is at 6.5, and wage growth is at 4.5. So inflation is still winning, and so that's the Fed's objective, is to get inflation down quicker than what it currently is. And again, hopes that inflation doesn't go up. Again, hopes that nothing else happens along the way. There's a lot of hopium in that it will work out. So, and at this point, with everything being in a recession, it's understandable. People want hope. I don't want to see the market go down. I would like the market to continue up. I'm a perma bull, but again, there's just too many bad things that are stacking up and causing this thing to lead for another drop before we do make that turn, at least in my mind. So we'll see there. BA, again, I don't think it's really going to break out the 214 until earnings. I think we're going to sit still. Again, I had a massive earnings run up, if you will, essentially all of Q4. So it's already pretty much put that in there. Question is, will it break out? Who knows? Again, overall market sentiments, maybe not. Maybe this thing just sells off. Normally it does pretty bad on earnings anyway. It doesn't stop it from pushing up. So I've never really got BA. BA moves really weird compared to other stocks. So I don't like playing it. So it goes up on bad news and down on good news. So, or sometimes it's just temperamental and does whatever it wants to do sometimes. So nonetheless, I don't play it. I just watch it. But I use it as a gauge. JPM, again, banks still holding fairly well, which is pretty incredible despite everything. Massive cuts and everything. People are seeing that as a positive again. In long term, it's going to be really bad. So even though things are temporarily pushing up, you have to understand that in a couple months, things are just going to be bad in general, worse than what they are now. And so how does the market take that? Does the market start pricing that in after this earnings? Strong possibility, normal cycle to the downside. We'll see. Goldman Sachs pushing up again, still roughly holding that 340. Breaks down below that could be a major problem. So really kind of watching that there. Again, if the market wants to push up, I think it's got headroom up to essentially that 378. Don't really see this breaking out unless the market in general wants to push, which I don't see that. I think this thing is just going to kind of play flat. And then if the market will push, it will be off of tech. And what tech can pull out for this earnings. So that is pretty much what I got. The markets, again, could be very confusing. And I know it is a lot of different times, especially when I talk about a bearish sentiment and the market's pushing up. You're like, well, markets, you said it was bearish sentiments. And I'm saying that in general, yes, there's some really bad things going on behind the scenes Not saying the market can't rip. It can rip. It's not just going to go straight up or straight down. It goes up some days and down other days, and build structure. And then you get news again that you don't know for sure what the Fed is going to do. You can assume what they're going to do off of data that they claim that they look at, but a lot of that stuff is not correct data, or again missing the most important data. But nonetheless, this is why we have earnings and can give us, as a trader or the investor, more insight into what's actually happening, and digest those things, because you'll get warning shots essentially months in advance off of earnings and what's to come, especially if you get any kind of forward guidance. Then you go from there. So again, we'll see. We'll see what happens moving forward. But looking forward to tomorrow. Looking forward to see what again Microsoft has. We'll take it from there. Tomorrow will be a lot more interesting once we start getting Microsoft earnings, and then rolling out from there. And Wednesday will be very exciting because there's a lot of big earnings on Wednesday. So, in a lot of different industries and some of the major impactful industries in value in Tesla and big tech and in chips. So Wednesday will be a big day. So with that being said, go ahead and drop a like button. And until then, I'll see you guys later.